Let's work an example that demonstrates how to prepare a master budget. This is a comprehensive example, so let's read through the information and we'll get started. Noah & Company manufactures wooden toy boats. The company is preparing budgets for the upcoming year. Budgeted sales for the next 3 months are January 10,000 units, February 12,000 units, March 9,000 units. All sales are on account and the budgeted sales price is $20 per unit. Variable costs of production are expected to be the same as last year. Direct materials, 2 feet of lumber at $2 per foot, and per unit that would be $4. Direct labor, 0.25 hours at $16 per hour. A quarter of an hour at $16 is $4 per unit, and variable overhead is $2 per direct labor hour. $2 per hour times 0.25 hours, that would be 50 cents per unit. Fixed overhead is expected to be $15,600 each month, of which $600 is for depreciation expense. The company uses absorption costing. Sales commissions are expected to be 10% of sales, and delivery expense is expected to be 1% of sales. Expected out-of-pocket fixed selling and administrative costs are $20,000 per month. In addition, the company expects to record $2,000 of depreciation on selling and administrative equipment and facilities. On January 1st, there were 2,000 finished units in the warehouse. Management desires to end the month with finished goods inventory equal to 20% of the following month's sales. On January 1st, the company had 10,000 feet of wood in inventory. Due to recent outages, management desires to increase direct material inventory by 10% each month next quarter. Prepare the elements of the master budget as requested. Now we're going to prepare several budgets and we'll reference this information from time to time. We'll begin with the sales budget. That is the starting point for the master budget. All of the other budgets depend on the sales budget. We're going to prepare this for January, February, and March. The sales budget, it looks just like the calculation for sales. You'll take sales in units. You'll multiply by the sales price per unit. And you'll get total sales dollars. This, of course, is computed to go onto the budgeted income statement. From the information provided, what we need to know is the unit sales and the sales price of $20. So we'll put in 10,000, 12,000, and 9,000 units. In January, 10,000 units times $20, sales are $200,000. February, 12,000 units times $20, that's $240,000. 9,000 times $20 is $180,000. Now that is the sales that will go on the income statement. Next up is the production budget. We're going to prepare this for the months of January and February. The calculation will be based on sales. You're going to figure out how many units you can sell, but you're also going to factor in if you want to maintain any inventories. So we will recall that sales are 10,000 units in January and 12,000 in February. We're going to add our ending finished goods inventory. That'll tell us the total that we need. We'll subtract our beginning finished goods inventory, and that will be production. Remember that on January 1st there were 2,000 finished units in the warehouse. Management wants to end the month, each month, with 20% of the following month's sales. So to end January, we want to end with 20% of what we're going to sell in February. February, we want to end with 20% of what we're going to sell in March. 20% of 12,000 indicates that we'll end January with 2,400 units. We need a total of 12,400. We began with 2,000, so we need to produce 10,400 units. So what this is saying is we think we can sell 10,000 units and we want to increase inventories by 400 units, so we need to produce 10,400 units. Then in February, our ending inventory in February is going to be based on March sales, which were given to be 9,000. 20% of 9,000 units is 1,800 units. So we need to have 13,800 units available during the month of February. Because we ended January with 2,400 units, we will begin February with the same 2,400 units, and we don't need to produce those. So production for the month of February needs to be 11,400 units.